Hi trader, this is a quick review on why stop losses are so key and how can we as traders protect ourselves against that vulnerability. Before we dive into that topic though, be aware that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information. This webinar is for educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. So let's take a look at this live example of the pound yen short that Nenad actually took from the 31st of May to the 1st of June. And you can see the entry right here, and the stop loss is here, all right? And the target is here. Now this trade ended up in a win. Great, 115 pips profit, all right? And the risk was only 40. So that's almost a 3-to-1 trade. But let's take a look at the details, because although it looks great, and it is a great trade, you can see that the stop loss was very close to being hit right in here. So if Nenad would have put the stop loss just a couple of pips lower, he would have seen a trade go into a loss of 40 pips and would have missed what would have been actually a great trade. And this happens a lot to traders that they see their targets or their stop losses just missed. And that's why being precise about these levels and knowing where to place them, the best spots, is so important, because about these details can mean the difference between winning a trade of 115 pips and losing 40 pips. Massive difference, as you can see here, the details just confirming that 115 pip win, and the profit here about 460 euros. So that's a great win. Let's take a look at the details. I also will show you a Euro odd setup that I won overnight with 95 pips win that was discussed in the live webinar as the swing trade setup of the day, the only swing setup, and that proved out to be very nice. So let's take a look and dive into the details. Looking at the live chart now, let's dive into the details about that trade that Nenad took. So apologies for these indicators. These are HARP chart indicators, all right? But let's take a look at why that trade was so successful. So we see the entry. Let's not focus too much on the entry, okay? That was according to the proprietary strategy that Nenad was using. AccuVeryMath. But let's take a look at the stop loss. We can see that the stop loss was nicely above the M2 resistance. You see that? And he tactically put it above that level. He also put it above these highs. So he went about 17 pips above that M2 level. He also went above these highs. And just because of that, he managed to survive. So using confluence, using basically pivot points as well, to seek extra shelter and not just going above the nearest top. I mean, if he would have used this top right in here, he could have made basically the stop loss shorter, right? It would have been only 25 pips. It would have been a lot of traders who would have done that just above this top 160.50 level as well. Would have gone to 160.55. Well, that would have been a loss. Look at that. Went to 65. He put the stop loss at, well, I think it was, let's take a look again, 70.75. All right, so clearly he just went a tad more than maybe the average trader would, and he managed to survive that trade. The price nicely turned, as the momentum bars are showing here, by the way, and target got hit with the purple line right here for 115. The same happened actually, ironically, with the Euro odd, and that's why I wanted to talk about the stop losses, because look at this swing trade. It was live setup, discussed actually in yesterday's webinar, and pre-fact, obviously, I took the trade, I put the stop loss here, and went down for 95 pips, as you can see from here to here. I'll highlight that with green circles, all right? So I took an okay setup. The better setup was actually this red arrow. It was even better. That was 120 pips. But let's let the entries be, and let's focus on the stop losses. And you can see that by my putting the stop loss above the pivot, all right, pivot point, the main pivot point, the daily main pivot point, I managed to survive that pullback as well. So, going just a bit wider typically, just going perhaps just a tad above what you think is necessary, I think could help just manage some of these trades to survive drawdowns. We're going to, of course, always, in some cases, see drawdowns of trades. We're going to see price action go against our position at sometimes. We need to give ourselves the best chance of surviving that. And I think by just going beyond that pivot point helps, and that was enough for me. I got the downside and I got the win. All right, make sure to take a look at our new website. We got a lot of live trading content here. We have also a 2-week free trial. This is all new things, so take a look. We also have a lot of free stuff here, so take a look at elitecurrency.com and take a look at all the great content that we're going to be providing in the near future. Thanks. Wish you good trading.